I'm Khalila Reynolds, and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. Come on, let's get this money. First up, Mailpac Group is now officially listed on the junior market of the Jamaica Stock Exchange. What's next? We hear from Executive Chairman Khary Robinson. And later, the analysts weigh in on the latest stock market developments. Mailpac sees triple-digit gains in its first week of trading, while the JSE's new NASDAQ technology wreaks havoc on the market. What's going on? But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. Norbrook Equity Partners has sold a 10% stake in Express Fitness to Sagicor Investments Jamaica. The investment is reported to be the first step to a wider partnership between the two to develop the Caribbean's leading health and wellness platform. Express is reportedly valued over $2.3 billion, putting the investment at about $230 million. The funds are to be used to expand the company's base to over 20 fitness facilities across the Caribbean by the end of 2020. The Jamaica Stock Exchange, JSC, is now using technology from the NASDAQ. But it wasn't a seamless transition. There were numerous complaints in the first few days about issues with the new platform, some of which affected the new Mailpac listing. The JSC has promised to have the issue rectified by today, Monday. Michael Lee Chin is no longer chairman of NCB Jamaica following a series of changes to the company's board. However, the Jamaican billionaire remains a director and chairman of NCB Financial Group. Patrick Hilton takes up Lee Chin's post as chairman of NCBJ. Meanwhile, Talia Lynn has resigned as a director of NCBJ, but remains as a director of the financial group and chair of NCB Foundation. And Oliver Mitchell Jr. has also resigned as a director of NCBJ, but stays on as a director of NCBFG. The changes took effect on November 30. Digicel says it's evaluating its refinancing options over part of its debt pile, now at a reported $7 billion. The company issued a statement following concern over an article published in the Sunday Independent in Ireland regarding a credit downgrade from internationally renowned credit ratings agency Fitch. Fitch says the downgrade is related to Digicel's unsustainable capital structure and an imminent refinancing risk on $1.3 billion worth of bonds due in April 2021. Fitch says it expects that Digicel will have to restructure debt at multiple levels in the next 12 to 18 months. CEO of Cygnus Credit Investments, Beresford Gray, says the company is aiming to raise $35 million from the market by March to take advantage of a series of deals lined up for financing. The targeted fundraising translates to around 4.5 billion Jamaican dollars. The company is going after a mix of debt and equity and will approach the market in stages. Cygnus is in the business of providing credit to other companies and ventures. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, Mailpac is now listed on the junior market of the Jamaica Stock Exchange. They're the first e-commerce company to do so. Their executive chairman, Khary Robinson, will join us. Taking Stock is filmed on location at I Create Studio on Hope Road.
There's a surplus of unfilled jobs in the creative industry. Kickstart a creative career with I Create Institute.
Now I'm at I Create. I just love it.
I saw where I was learning things that I could utilize in my present job.
And I have all the skills to do every basic animation thing now.
Jumpstart a creative career with I Create Institute at UCC. Visit icreateedu.com.
This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock. Well, e-commerce and shipping company Mailpac has just listed on the junior market of the Jamaica Stock Exchange. Their executive chairman, Khary Robinson, is with us. Hi, Khary.
Hey, Khalila, how are you?
Welcome and congratulations.
Thank you, thank you.
So Norbrook Equity Partners, now Mailpac. one of your subsidiary companies. Is this the first one that you've taken to the
First
market
one.
successfully?
First one.
Okay, well, congratulations.
And it was actually our first investment as well, 10 years ago.
It was your first investment.
Yeah.
Tell me a little bit about how, did you always want to be an entrepreneur?
I think so. I grew up in a very entrepreneurial family. My dad has been an entrepreneur for 40 years. My brother is an entrepreneur. And so I got to see and grow up in an environment where entrepreneurship created a lot of flexibility in how you created value. I wanted to continue along that path, but I spent quite a bit of my time in finance, especially on the private equity side in the US. And so I saw where there was an opportunity to merge the two, investing in companies, but then driving them forward with an entrepreneurial push. And so that's what we've been doing for the last decade.
I like the story that you told at the listing ceremony about how you came to acquire Mailpac. You were initially a customer. Tell me about that.
In all our businesses, we look for industries and companies that we think are well positioned to grow. And I can't think of a better company to grow and how to identify that than if you are a customer and a happy customer. It means that the company is doing something right. And so a lot of our businesses are companies that we've identified because I'm a customer, because we're hearing good things about it, and we actually approach the owners and try to convince them that we would be good stewards for the business after they transition out.
And that was back in?
So Mailpac was in 2010.
2010. So they're looking at you, this young guy now wants to buy me out. So how did they take that?
It takes some bit of courting,
I'm sure.
as with all relationships. They were actually young themselves. I think they were in their mid-40s at the time. They had spent 10 years to build a business, but they wanted to focus on family. They had two young children that were getting into high school, and one was, kind of getting ready to go to college. And Andrew and Colleen wanted to be there more and support them. And they made that decision, and it has paid off well. Their son worked with us this summer before he went off to Credit Suisse. Brilliant guy doing great things now, working in private equity in New York. So they made their transition for family reasons, and we transitioned in for business reasons, and it was seamless, and we still talk today.
What does it take to bring a company to market in Jamaica? Is it a difficult or tedious process?
It depends on how prepared you are before. So the way Norbrook is set up, we have a number of subsidiaries that report up to Norbrook as the parent company. And so there was a lot of corporate governance and structures already in place, because when you're managing a number of businesses across your portfolio, you need to make sure that you're gathering information quickly and seamlessly, and that the governance structures are in place. We skip that hurdle. I find that some other companies that are preparing, they have to spend time putting that infrastructure into place, because it's when you're publicly listed, there is a lot of governance requirements that are there on you. So if you don't have that in place from before, that I see as somewhat of the challenge. The process itself was quite straightforward. We had a great broker who supported us step by step. We've never done it in a Jamaican environment before, so there's a lot to learn, but they were great supporting partners in the process.
Yeah, I'm sure right now in the current business environment in Jamaica, it's so exciting, so much is happening. There are a lot of other business people out there looking at you and looking at what other companies have done and thinking, I aspire to list as well.
Yeah.
So tell me a little bit about Mailpac now. One of the concerns that some people had when looking at the prospectus and looking at the possibility of investing in this company was the vast competition out there. It's a very, very, very competitive space. But what makes you different?
First of all, I think it's, people always see competition as this negative thing. And you see that if you have a very limited scope on what you think the industry can do and what you can do with your business. For us, we were relatively a monopoly for many years. And I think that actually has disadvantages, because when you're in a monopolistic environment, you can get lazy in terms of how you present yourself, the solutions that you bring to your customers. But more importantly, awareness becomes tough because you're the only one in the market trying to convince people of a solution. And when we started, maybe 1% of Jamaicans were shopping online. So what we've seen is that a lot of people have come into the space and created awareness across the market. We're still at only about 6% relative to the US, that's 81%. So there's tons of growth, and we are happy that we are leading the market, but in a space where we have our positioning and many other providers have their positioning. We differentiate ourselves though by being a premium provider. And premium means that we need to give you solutions and services that you can't get anywhere else. So we continue to invest, and we have invested significantly in the technology and in the infrastructure of the business. One example is our free returns, right? So when people used to shop online, they were afraid because they weren't sure that if the item came and it wasn't what they wanted or it wasn't the right color, then what happens? They're stuck with this thing because it costs so much to send it back. So we invested in this insurance platform that in your price, there is a built-in insurance that allows you to return anything for free that you bought through Mailpac. We have a landed price tool, for example, that also allows you to see a landed price before you buy it, which is another big step for the market, because if you have a budget and you see an item for $50 online, you actually don't know what it's going to cost you because there's shipping and duty that needs to be added. And for most providers, they give you that price when it gets here. So we went and we spent time and money to integrate with Amazon and eBay and all these platforms, so that when you shop through our tool, you can actually see the landed pricing before you're buying. We have a tax-free address, that's a 7% discount that you get on any item you buy and ship through Mailpac. We had to work with the Florida Revenue Department to do that. So we're trying to stay ahead and make sure that we do things technology-wise and infrastructure-wise to give our customers a premium service, and that's who we aim to be. And as the market expands, we'll hold that position, and there'll be space for value players and discount players. Everybody will find the solution that's best for them.
So that's what makes your higher cost worth it, because that's the other thing that I've heard from customers and potential customers, that Mailpac kind of expensive though. I can get the same service from someone else for less.
Right. So
but it's not necessarily the same service.
Correct. So the first thing is that it's not the same service, but more importantly, again, about 2 years ago, we revamped and launched what we call the new Mailpac. And a part of that was to lower our rates because we needed to go broader acceptance. So we were serving a market that was upper echelon for years, and that disposable income was much higher. But as we go broader to the market, we have significantly reduced our rates. I think I did a analysis the other day, and we are kind of in the middle of the market when you add all the fees and take out the 7% discount that you get. And on the bigger providers, we're maybe $1 US more, or $1.50 more. On an absolute basis, that value that we create for them is not that different in terms of pricing.
So how did you do in your first couple of days trading?
So it's been great. I'm learning. I've never owned stock in Jamaica before.
Really?
Yeah, this is all new to me.
IPO listing a company and never owned stock before.
Yeah, I tell people all the time, we focus on building businesses. So when we deal with investment banks and so on, I said this is the part of our business that we don't want to be doing because it's taking us away from running our business. We broke the quote-unquote circuit breaker the first day and the second day. I haven't really been watching because for us at Norbrook, it doesn't really matter at this point. We have to just keep running our business and making sure that Mailpac continues to serve its customers and positions itself to be the leader of the market. It's Christmas time, and so our volumes are ridiculous.
I'm sure.
So we've been quite busy, but hopefully things will continue to move in that direction with our stock.
Full of work and busy as you would like to be. So the big news came out a couple days ago as well about another one of your companies, which is Express Fitness, Sagicor Investments, making an investment in how much they're putting in the company?
They bought 10% of the business.
10%. All right. So congratulations again on another big deal. What are your plans for that company?
We're looking to target different segments of the market with different solutions. That may be different price points for the gyms, and that may also be different solutions, whether it is yoga. We're targeting Trinidad, Barbados, Bahamas, and Cayman. We are already in conversations either to do acquisitions in those countries or to build out organically.
It's going to take some money.
Sagicor's investment will come into play, but
it's a possible IPO for Express.
Who knows?
That's all the talk on Twitter.
I don't follow Twitter enough. The reality is that the capital markets have opened up, and it's been a great tool for entrepreneurs. In my speech at the listing, I thanked Marlene Street Forest for the innovation that the GSE has allowed entrepreneurs like ourselves to go and find capital to grow, right? So today Norbrook has no outside capital, and it's not like we wouldn't have taken outside capital, but for years people weren't looking at private equity, and people weren't looking at supporting entrepreneurs with equity, and even with debt it was challenging. So the fact that entrepreneurs can now go out and raise capital to grow their businesses is a new phenomenon for us. What I will say is that Express has the opportunity to grow now even further, now that we can tap into new pools of capital.
All right, thanks, Khary. All the best.
Thank you so much.
When we come back, I've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Time now for your market recap. 89 stocks traded across both the main and junior markets of the JSE for the week ending Friday, December 6, 2019. 38 advanced, 37 declined, and 14 traded firm. Nearly 121 million shares changed hands, totaling $1.2 billion. Wigton Wind Farm traded the most, taking up 28% of market volume. The stock lost 2 cents, with people buying and selling 34 million shares in the company. Wigton closed the week at 98 cents. Sagicor Select Fund Financial traded the second highest, with people buying and selling 28 million shares in the company. The stock gained 4 cents to close the week at $1.13. And Mailpac Group saw heavy trading in its first few days on the market. People bought and sold 20 million shares in the newly listed junior market company, with the stock price more than doubling in just 3 days. Mailpac opened the week at $1 and ended at $2.31, making it the top advancer. Other big advancers were Honeybun. Its share price jumped 22% to close the week at $8.01. Iron Rock Insurance gained 16% to end the week at $4 a share. And Mayberry Investments also gained nearly 16% to close at $9.84. On the losing side now, SSL Venture Capital Jamaica took the biggest price hit last week, losing nearly 15% to close at $1.28. iCreate was the second biggest loser, down nearly 13% to close at 55 cents, and Siboney Group also lost ground last week, losing 12% of their value to close at 10 cents. This segment of Taking Stock, The Analysts, is brought to you by Proven Wealth, Jamaica Money Market Brokers, and NCB Capital Markets. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. We're joined this week by research analyst at NCB Capital Markets, Romario Sterling. We also have head of treasury at Proven Wealth, Danielle Baker. And our guest analyst this week is executive member at 876 Invest, Justin Scott. Hi, guys.
Hi.
Romario, you were on my pilot episode. Good to have you back. So what do you have your eye on this week?
Two things that caught my attention this week would be the recent results of Jamaica Broilers Group and Scotia Group. Jamaica Broilers saw a 9% increase in net profit attributable to shareholders, and this was primarily due to a 2.1% expansion of revenues, which was driven by the Jamaican operations that grew by 5% and the US operations that grew by a negligible 1%. The Haitian operations continue to weigh on the performance of the overall company because the Haitian operations reported a net loss. I think it's about $6 million relative to profit that they made in the prior year. This is for the 6 months results ending October, by the way. And the reason why the Haitian operations performed poorly was because of the political and economic instability in Haiti. So it's really an environmental issue.
But it seems they always have political and social instability in Haiti. Was that a good move to begin with?
I mean, there was a point in Haiti's political trajectory where it seemed as if things were turning around. I mean, after the earthquake, you had leaders that emerged, people who could potentially transform the country. And I don't remember the exact date when Jamaica Broilers went into Haiti, but I'm thinking maybe that point in the country's political history would have possibly inspired them to go into the country, because at the end of the day, Haiti is a virgin market, so opportunities are there. But when you have a country that's so underdeveloped, under that opportunity, there's also a lot of risk. It's a risk that they were willing to take. I mean, initially, I think that the Haitian operations performed fairly well, but you know, things changed, and I wouldn't say it was a bad decision. It was a risky decision, and who knows, maybe it might not continue. I just hope they make the right decision for shareholders, whether it is to exit the country or probably they say where things will actually improve over time.
And you mentioned Scotia's results too. We'll come back to that later if we have some time.
Okay.
Daniel, what are you eyeing this week?
Generally, my focus was on the most recent listing that we had, Mailpac. So far, Mailpac has returned over 100%.
Already?
Already on the IPO price. Day over day, it has broken the circuit breakers. Typically, we see where these issues that have high oversubscription tend to have a backlog, or persons that have been refunded monies. Pretty much, they would already have a preset target range that they would have said, well, if we don't get into the IPO at a certain price, once it is within the band, we'll still try and pick up those stocks. So typically fund managers, pension funds, if they're attracted to it, they would be those investors that have a target range and are still willing to pick up stocks in the open market. Based on the queue, if you look at it, it is heavily skewed to the bid side, which means that there should be some upward momentum going into next week. After those bigger or medium to longer term investors come out of the market, you may see a small pullback or what I would call a plateauing of that share price. That's a major stock that we have eyeballed this week. We are also seeing where the financial stocks have been performing, namely Proven Wealth. Proven Wealth actually returned over, well, I would say 500% over year in profits.
Is that Proven Wealth or Proven Investments?
Proven Investments, which Proven Wealth is a company under that umbrella.
Justin, what's on your radar?
Well, I actually share Daniel's sentiment with my bullish outlook on Mailpac. Seeing as how they had a bit of a small general pool, so that would have been a small supply, which would lead to increased demand in the stock, and which we have seen over the past couple of days with their 100% day-over-day stock price increases.
You guys who are in, do you do trading or just do research and analysis?
I am directly in the trading field.
Okay, so tell me how, because you heard about the JSE transitioning to the new NASDAQ platform last week, and I've been seeing a lot of complaints about it. How did that affect the performance of a Mailpac and the market in general? What happened?
I first want to clarify which sector of the market actually had the complaints, because on the platform side, right? This is the generic NASDAQ platform, which all the brokers pretty much use to place orders, edit orders, and trade. That was relatively stable, right? You only had some background issues as it relates to reporting and extracting data. However, I know that persons that may have used JTrader, right, which the JTrader platform or the web station links with NASDAQ, that may be where you had the major issues. But as it pertains to direct trading and treasury related, the platform, I think, performed favorably. With any new platform and introduction, you will have teething pains. We had recently, I think about 2 to 3 years ago, we had the Jamaica Stock Exchange introduce the Avento platform. That was much more problematic than this has been. So against that backdrop, I think it was okay. As I said, with any new platform, you will have teething pains, but not to the extent where we couldn't trade. And the mere fact that we had Mailpac going through the rounds and different layers of circuit breakers pretty much tells us that the platform is stable enough, and we should see advantages going forward and see improvements going forward on a holistic basis.
You had anything to add to that, Romario?
Yes. I also know that there were some issues regarding the pricing that was displayed on the website. So that, for instance, you would say an incorrect price for a company, And I think, as you said, it's just really because of the, the bugs that is normal whenever you implement a new system. It may have something to do with, transporting the data, the actual data to the website. But as you said before, it's pretty normal to have these issues when you implement a new system. That was the only thing that I observed. Overall, though, I welcome the partnership with the NASDAQ. I think it bodes well for improvement in transparency for the market, as well as the fact that the JC said that this partnership is expected to put them in a position to introduce new products, enhance trading capabilities, and speed up order executions. So the positives over the long term, I anticipate will, outweigh the small hiccups that we have in the implementation of the system.
You had an experience with it, Justin?
Yes, I actually had some issues when Mailpac had initially released. So there were some issues with the queues, with the closing prices, with actually being represented on the JC app itself. So I'm hoping that in the coming time, JC has actually promised to remedy it by December 9th. Mm-hmm. So we should be seeing some smoother sailing on the horizons. But I'm generally optimistic on the introduction of the NASDAQ platform.
I did see an apology from the JSC actually, and they said that things should be working smoothly by today, Monday, indeed. So, Romaro, you had mentioned Scotia's results. Anything jump out at you there, or it's pretty much as expected?
The main thing that really jumped out at me was the fact that they actually improved. It wasn't a decline, it wasn't a contraction, or it wasn't really flat. It was a 3% increase relative to the prior year. The driving force behind the outcome or the performance of the company was really an improvement from the treasury operations as well as the insurance segment. Commercial banking and corporate banking actually declined. And it's kind of interesting because Scotia has repeatedly stated that they will be focusing on their core, which is commercial banking and corporate banking operations. So the contraction in those two segments, it's kind of concerning. Mm-hmm. However, I think treasury operations is also a part of their core, and that's the segment that made the biggest contribution to the bottom line. So, not bad.
Cygnus, they have released some ambitious plans for 2020. They want to double their growth and raise $4.5 billion. Doable?
Firstly, it is doable, and I think that they have picked a pretty excellent time to try and raise the money. Next year, we'll have a net about 90 billion in GOJ maturities. Hence, the market will be very liquid. Based on the posture of the government, we don't anticipate any new bond issuances. Hence, that money should be in the market for persons on the corporate finance side to raise monies, and like you have mentioned, Cygnus to easily raise $4.5 billion.
Well, 2020 should be one to watch then. Justin, where are you on Cygnus?
Oh, I'm very, very much bullish. Right? I'm very optimistic with what Cygnus has in plan, especially considering Jamaica's current state of affairs, where Cygnus Credit Investments, they make a lot of their operating income from lending money to small businesses. So essentially, Cygnus's position on SMEs is really great.
Romario, what are your thoughts on Cygnus and their plans for 2020?
I'm optimistic about the company's growth prospects, especially given the reason why they are going to the market. Cygnus would have deployed most of their dry powder, and that's basically the funds that they have available to provide to companies through these private credit instruments. Last year, they had about over 20 million US in dry powder, and they've deployed most of that. And
dry powder, that's what it's called?
That's what it's called, yes. And now they only have a little bit over 3 million US at the end of 2019. So it shows that there's a demand for what they provide. The fact that they don't have enough to provide right now and they have to go to the market to raise it. So I think over time, the company will definitely do well. Also, I like the fact that they are trying to expand their reach across the region, because currently about 60% of the company's portfolio is invested in Jamaica, and they have an objective to reduce that to 40%. They still want to remain anchored to Jamaica since that's the market they're familiar with. However, they are staying true to their mandate as a regional private credit company, and they will be expanding across the region. Cygnus, I think, is a good company, and I'm optimistic about what they will do with this $4.5 billion that they plan to raise.
Sounds like you're all pretty excited about Cygnus going forward, but are there any risks, Justin?
Well, in terms of the risk, as you just mentioned a while ago, foreign exchange is an issue if there is continued volatility within the market. So that's something to look out for. However, I'm still very much bullish on Cygnus, considering the fact that they have chosen to focus on the small businesses in Jamaica. So with the development of small businesses, we should be seeing added returns, as well as the fact that it has been a common thing now for other financial companies within the sector to devote their attention towards SMEs. And right now, Jamaica is operating at a fiscal surplus, meaning our debt is below what we've been earning. So really, to now advance Jamaica to a point, we need to increase our productivity, our production. So it's really the right way to be focused towards. So with additional development, we should be seeing a whole lot more returns. We should be seeing a whole lot more returns towards Cygnus.
Another risk that I think is worth mentioning is the fact that, I mean, they're providing debt instruments to companies, so there's always a possibility that, you know, companies may not be able to repay this debt.
Right,
currently, Cygnus has 0 non-performing loans, but the management has stated themselves that, you know, this will not be the case in perpetuity.
Right,
it's because the company is relatively new. It's not normal. So eventually, you'll see some non-performing loans. However, management has stated that, you know, they will keep it at a minimum.
Just to add, I think the major headline risk is really coming from a global level, right? Once the recession fears that exist now does not transcend to reality, I think that a company like Cygnus would be okay. If these fears actually escalate, it's everybody that would be touched. So I think that's a broad line risk.
Exciting times ahead. Thanks again, gentlemen. Justin, how can people find your organization, 876? Anybody can join, or just for university students?
Anybody can join, absolutely, because our real goal is to increase financial literacy across Jamaica and a whole, to essentially get Jamaica itself synonymous with investing. So you can actually find us at 876 Invest on Instagram, where at the moment we're sorting out the structure of our platform to really sort out how more people can be involved and we can add more value for our members.
Sounds good. All the best. Thanks for joining me.
Thanks so much.
We'll take our final break. Come back with more. Taking Stock, the Analysts, was brought to you by Proven Wealth, Jamaica Money Market Brokers at NCB Capital Market. And that's our show for this week. Thanks for watching. Make sure you check out my other features, Money Mondays JA, Money Moves JA, and What's in It for Me. Coming up on Money Mondays JA, or in Money Mondays JA this week, I'm telling you the difference between the junior market and the main market. It's our FAQ edition, frequently asked questions. I'm Khary Reynolds. See you next time.